Ladies and gentlemen, first of all, for the invitation to address this conference on implementation of European Green Deal and to discuss on the issues of how to finance the transition. 2 weeks ago, the World Meteorological Organization confirmed that last year was the second warmest on record, and it didn't come as a big surprise to many people. Unfortunately, TV footage of raging bushfires in Australia, melting icebergs in Antarctica, freak weather in general has become commonplace. From cyclones to floods, 2019 was a year of record extreme weather events. And this is an ongoing trend. Since 1980s, each decade has been warmer than a previous one. As so many had said, most recently in the last week's World Economic Forum in Davos, the world has to act urgently before it's really too late. In its annual risk report, the World Economic Forum now places climate emergency as a #1 issue of concern. It should concern every one of us. Determination to tackle the climate change is one thing. The Green Deal demonstrates that as we commit to become climate neutral by 2050. Another is to back it up financially. This bold ambition comes with a hefty price tag. To make the Green Deal a reality, we need a solid funding plan. Just to meet our 2030 climate and energy targets, we need an extra 260 billion euros in annual investments. As we raise our ambition to cut emissions, we will need even more money to fund a long list of projects and activities. They will all play a part in Europe's green transformation. Small-scale energy efficiencies, for example, helping people to cut household emissions and reduce their energy bills, lowering car emissions and reskilling workers from coal industry regions, or building larger-scale infrastructure projects such as clean energy grids and low-carbon transport systems. This is why we devised the European Green Deal Investment Plan, or Sustainable Europe Investment Plan. It puts sustainability at the core of how we invest. It brings together new policy initiatives and existing instruments. It signals a change of the mindset. It encourages us all, public authorities, companies, and investors, to think green when we invest. This will give us real financing clout, at least 1 trillion euros over the next decade to fund sustainable projects across the EU. Around half of that will come from the next multi-annual EU budget, with at least 25% of spending earmarked to support climate action. We expect this to trigger a further 114 billion euros in national co-financing for climate and environmental projects. Our investment program, InvestEU, will leverage around 279 billion euros of private and public funds for climate and environment-related investments between 2021 and 2030. Since InvestEU uses EU budget guarantee to crowd in other investors, it can help public funds to go longer and give investment an extra boost. The guarantee will allow the European Investment Bank and other partners to invest in more and higher-risk sustainable projects, and in turn, that will attract more private investors. And as you have heard at length in the last panel, the Just Transition Mechanism will aim to provide at least 100 billion euros over the next EU long-term budget. Beyond the budget, we will also tap into innovation and modernization funds in the emission trading scheme. As you know, by 2025, the European Investment Bank aims to double its share of sustainable financing to 50%. However, it will still not be enough. It's also clear that public purse alone cannot foot the bill. There's no way that stretched public funds can meet all those needs. So we have to rely also on private sector. Public finance needs to lead the way, while private sector needs to provide the scale. We need it to help to attract capital from across the board, equity, loans, project finance, so that we reach our climate neutrality goals by investing in economic activities that mitigate climate change. We have made it easier for investors to do this with a new EU classification system or taxonomy. Now that we have agreed on it, the system needs to enter into effect so that investors can identify which economic activities qualify as sustainable. Ladies and gentlemen, raising investments is vital, of course, but it has to go hand in hand with the right policy and regulatory environment. This is how we guide investors towards sustainable investment and steer changes in behavior of companies and households. For example, we plan to propose legislation on green public procurement and adjust EU state aid rules in the light of the new Green Deal. Later this year, I will present a renewed sustainable finance strategy, which will include a revision of non-financial reporting directive. This will require companies to increase disclosure on their sustainability activities and give adequate, reliable information on sustainability risks and opportunities. Not every detail can or should be fixed into law. There is also a need for a clear reporting standards for companies to apply. So today I can tell that the European Commission will support a process to develop a European non-financial reporting standards. This is in line with the Council conclusion on the Capital Markets Union at the end of the last year. I will soon invite the European Financial Regulatory Advisory Group to begin preparatory work for these standards as quickly as possible. The many overlapping international reporting standards and setups confuse companies and investors. They also find it expensive. The EU is well placed to address this situation and show leadership in building consensus for a set of standards that can be widely accepted. However, we cannot do this alone. The best and most widely accepted elements of what exists today will be our starting point. We will also use expert assistance from those organizations and individuals who can best contribute to the process. Along with the new taxonomy system, better corporate information will be cornerstone of our strategy. I will enable financial market participants to disclose their sustainable investments to their clients. This will help us to establish standards and labels for sustainable investment products, green bond standard, green mortgages, and EU label for green financial products are just some examples. Ladies and gentlemen, while we want Europe to be at the forefront of the fight against climate change, that is not enough. The EU is a polluter and we are actively doing our part. But we account for only 9% of the total global greenhouse emissions, so other countries need to play their part too. With a global cooperation, we can achieve much more together than acting alone. This is why we launched the International Platform on Sustainable Finance with like-minded countries from around the world. It remains open for others to join as we work together to green the global financial system. We need to coordinate our green finance initiatives on the ground, otherwise the platform cannot fulfill its potential. Countries should link their sustainable financing requirements to global sources of funding to scale up sustainable finance at the level that the world needs. The fight against climate change illustrates the potential of what we can achieve at the international stage when working together. While our aim is to generate economic growth, it must also be sustainable growth, sustainable growth, so that we preserve and protect our natural world as much as possible. The more we can succeed in attracting green and sustainable financial inflows, the more growth and jobs we can generate and make a cleaner planet too. Thank you very much.